Hey guys, good day everyone. This is Kingsley Daniel here, and I'm the owner of Think Different Forex. Okay, so in today's video, we are going to go over something that is very interesting, and I know you guys are really going to love this content that we have here. So please make sure you subscribe, like the video if you really love the content that we are going to be sharing here, because this is something that is really going to change a lot of people's lives. Okay, so this strategy or this particular topic for today, we are going to be talking about how to grow a very small account. Say you have an account of like $20 to like $100, how you can grow that account to a significant amount of money without really blowing that account. So in this strategy, I'm just going to show you how we use compound interest in doing this, okay? And then I'm going to show you a very simple strategy that you can be using to actually apply this particular concept and make money on a steady basis, okay? So what I have here right now is the compound interest calculator, all right? So let's say, for example, now, this strategy, the way we're going to do it, okay, we are going to be compounding our account at a 30% rate per week. So we are looking to make 30% of our account every single week. Okay, and this is very doable because this is a very small account, so we don't intend um, to take to heart a very tight risk management plan. Okay, so we are really going to be flexible with this particular account because it's a small account and we want to grow it into something big. So it's a little bit very risky, but if you really want to grow the account, then you have to put in more risks. All right, so if you know you are capable of like risking $20, risking $50 in the market, then this strategy is for you. So what we are going to be doing is this. First of all, let's say, for example, we have a $50 account, okay? Let's say we have a $50 account. Let me just show you how we're going to compound it with 30% interest rate per week. So you can see here we have the interest rate. We have the interest rate here as 30%, okay? And we set it to weekly, all right? So we set it to weekly, and we are looking to build this account for 5 months. Okay, so please, when you're trying to do this, make sure you understand that you have to give your trading time. All right, your trading strategy needs time to work, and you also need time to grow an account. So don't just come into the account and say you want to just risk all your money into the account. It won't work that way. You can make some very quick money, but you're still going to lose money in the end. So this is a very conservative way of actually doing this and not really blowing your account. So let's just calculate this and see what we get for 5 months. Let's click on calculate. You can see that here we have the balance as 50. This could be anything that you want to start with. If it's 100, you put in 100 here. So just go to Google and type in compound interest calculator, and you will see this calculator on the first page. All right. So our initial balance is $50 that we have to risk. So our interest rate that we are looking at is 30%, and it is per week. Okay, that's why we set it to weekly. And our duration, that is the time we want to really grow this account. We want to grow this account for 5 months. Okay, so we're just going to click on calculate here and see what this actually gives us. All right, so if we look here now, we'll see that this particular $50, if we can grow this account from $50, we can grow this account from $50 to about $33,200 within 5 months. All right, so this is a very good start for you. You can grow this account from $50 to $3,200 in 5 months. This is crazy, guys. Okay, so I'm going to really show you the strategy that you can start using and how you can use this strategy to your best interest that will help you in growing your small account. Okay, so still to the end of this video if you really want to learn the strategy that I use in building very small accounts. It's very simple, very easy. Anybody can do it. Okay, it's not something that's very complex, and I'm going to show it to you at the end of the video. So now if you look at the month 1, okay, if we look at month 1 here, we'll see that from our initial balance was $50. Okay, then after month 1, after trading month 1, we made an interest of $65 dollars. Okay, so if you add that $65 to the $50 that we had before, would have made $115. Clear? Then month two, we are going to be trading at 30% per week. That is, we're going to be making about 120% within a month. Okay, so at month two, we'll make 120. Sorry, well, at this month two now, our initial balance will be what? 115. That's one here. Okay, then we are going to make 120% of it, which is $149, which is what we have here. Okay, let me just delete this, which is what we have here. All right, then at the end of the month after trading, our total equity will become what? $264. Okay, the same thing we do for month three. We make 120% for month three. We'll be making $343. Then if we add it to our initial balance, it will become $608. Then for the fourth month, we'll make $790. Then if we add it to $608 that we had previously, okay, for the month three, we'll get a total of $1,399. Okay, when you get to this place, you can actually stop. Okay, you can actually stop this because now your account is actually huge to a particular extent. Okay, and you can now start trading the normal way of trading, maybe just risking 2 to 5% of your account. All right, so then for the month five, which is the 5 months program, that 5 months duration that we set for this particular strategy, we'll be making $1,800. Sorry. Then at the end of the whole 5 months, we would have made a total of $3,200. All right. So this is a very, very good strategy. Okay, whatever amount you have to risk, okay, you can just come here, just set everything here, and this calculator will actually do the calculation for you. So like I promised you, I'm going to show you a very, very simple strategy that I use to grow small accounts. Okay, you don't have to make anything complex. All right, it's very, very easy. So what we do, let me just take you to my MT5. You can actually use this for any currency that you have, that you want to trade, that you like to trade. Okay, you can use this for any currency that you like to trade. It can be maybe forex, it can be currencies, it can be synthetic indices like we have here. I have crash 500. Okay, so all you're going to do, guys, is you're just going to stick to one pair. Okay, you're going to stick to one pair. Don't trade too many pairs. All right, don't trade too many pairs. So this is the strategy that you're going to be using in growing small accounts. So now, what you're going to be doing, like you see here, I have 3 moving averages. Okay, I have 3 moving averages. Let me show you. I have 3 moving average on this chart. The first moving average is the 40. Okay, the second one is the 20, and the third one that I have here is the 200. Okay, now the use of this 200 moving average is to show me the trend. Okay, to show the trend on the chart is the use of that 200 ME. So when the market is above the 200 EME, the market is in an uptrend. Okay, when the market is below the 200 EME, the market is in a downtrend. All right, so let's just go over and see some examples of what I'm talking about. So now when the market is in an uptrend, okay, all we are looking for, like we can see in this particular area here, you can see that the market is in an uptrend, which is this black line. Okay, which is this black line. So this is the 200 EMA, while this blue one is the 40, and this red one is the 20. So in an uptrend, when you see that this the red AMA cross above the blue EMA, then you are buying. Okay, in an uptrend. In the downtrend, when you see that the red EMA cross below the blue EMA, then you are entering sales. Okay, so let's just get on some examples and see how we could have traded this particular thing right here. Okay, let me just delete all this. So let's say we started from here. Okay, we can see that the market is in an uptrend clearly. All right. So as soon as the market, you can see, as soon as this market, this red EMA was crossing below here, the market was crossing below. Then as soon as the market moved up, we saw a cross on this EMA, which is at this point here. At this point here, you will see a cross. All right. So all we are just going to do here, guys, is we are just going to allow the market to retrace back to this particular EMA. Okay. We allow the market to, let me take out all this. So we allow the market to retrace back to this EMA here. Okay. And we place our buys at this level. Very easy. Okay, we place our buy. We are going to do where we are going to set our stop loss is we are going to set our stop loss below the low. So if we place our buy here, okay, our stop loss is going to go below this particular low here. All right, and all we are going to target is a 1 to 2 risk to reward. So you are going to be risking only 10% of your account on this particular trade. Okay, you're going to be risking only 10%. So if you have $50, then you're going to divide your $50 by 10. Okay, that will give you $5 each. So on every single trade that you place, you're going to be taking a trade of $5. All right, and your target is going to be $10. All right, so once you win a trade, every winning trade is going to give you 20% of your account. Every winning trade is going to give you 20% of your account. So you don't have to trade too much. You just have to trade very, very small. Okay, trade very, very small. Look at here again. Just look at another example here again. So we made profit on this trade. This was the first trade we took. We made profit on this trade. Okay, then you saw that the market started coming down again. All right, the red line has crossed below the moving average. Sorry, the blue line. So we know that we are in a corrective structure. Okay, so all we are waiting for is for this particular cross here to happen. All right, when that cross happens, sometimes you're not going to get that retracement. So when that cross happens, all we are just going to be doing, like you see here, we're just going to wait for a small correction back to the moving average. Okay, just like you had it here. I don't want this video to be long. Okay, so we are just going to this push. Okay, then we saw this retracement. We saw this retracement here. So all we do is we're going to place our buys to make money at that top. So when we enter a buy here, okay, our stop loss is going to go down below this particular low that was made here. All right. So this is how you're going to do it. And in this particular case, let's see if we could have made money on this trade. So if we place our buy here, okay, then the market went up. You can see how the market went up. So whenever you see that crossover is when you start buying. Only buy when the market is moving. Okay, don't buy when the market is not moving. Anytime you see the market that it has crossed, you buy. Now look at the part of the downtrend. Okay, now we see that there's a downtrend here. Okay, we would have lost this trade actually. So you see why I said you put your stop loss. Your stop loss should always be at the top. Okay, let's say we enter this trade at this level here. So if we enter this trade at this level here, and our stop loss is above this high here, okay, this would have been a loss of 10% of your account. So you lose only $5 in this trade, and when you are making profit, you are going to be making 10%. If you continue again, now we see that the market is trending up. All we are looking is buys for buys, Abby. So now look at here again. Now we had another winning trade here again. So the market was crossing down, then it turned here. Okay, as soon as it turned, we wait for that retracement, which happens here. Okay, on the moving average. So we are going to buy there. Since we are in an uptrend, we're going to buy there. Our stop loss will be here. Okay, we are going to risk $5, and we are looking for $10, which is 20%. $5 is 10% of your account. You're looking for $20. So once you hit your target of 30%, then you stop. Okay, Once you hit your target of 30%, you stop for that particular week and you do the same thing for the next week again. Okay, so this is how we are going to do it. This is how you grow your account, and it's very, very easy, guys. The strategy is very, very simple. The plan is very, very simple. So just make sure you stick to the plan and follow it religiously. Okay, and surely you're going to make that particular amount of money. Okay, so don't be greedy. Just do it little by little, and before you know it, 5 months is already there and you've made a very, very large amount of money. Okay, so see you in the next video, guys. If you really enjoyed this content, please try and subscribe, like the video, and also share the video to your friends, okay, so that they can also enjoy this particular content. Until the next video, see you there.